Hello, and welcome back to the Argyle CFO Summit. My name is Brittany Sullivan with Argyle, and it's great to have everyone joining us today. A couple of notes before I turn things over to our esteemed speaker. First, a quick reminder to stop by our sponsors' virtual booths at any time during today's event and for the following week. Our partners are committed to providing you with valuable content and a great overall experience. At any time during today's event, you can visit their virtual booths from the main agenda page, which include complimentary materials, information, and meet and greet opportunities. To ask questions throughout the session, simply type into the Q&A chat, and we will address your questions at the end of the session. Now, without further delay, I would like to introduce our speaker, Kate Bowden, Director of Enterprise Solutions, Tax Technology at Avalara. We are excited to have Kate with us for a thought leadership titled The Rise of E-Invoicing, How Technology is Streamlining Requirements Globally. Welcome, Kate, and over to you.
Hey everyone, welcome to this session on electronic invoicing. I have a couple slides to get through right at the beginning here. A disclaimer, I just want to make it clear this session is for informational purposes. It is not legal or tax advice. And we have our safe harbor statement here. Okay, the agenda today is electronic invoicing. We're going to start with a definition and history. We're going to talk about why is electronic invoicing occurring, the importance of accurate tax calculation to support the electronic invoices. I'll do a brief highlight on the US e-invoicing, and then I'll talk to you about our ELR solution, Avalara's e-invoicing and live reporting, and then we'll wrap it up with a conclusion. So just a little bit about me. My name is Kate Bowden. I am a director here at Avalara in the product organization, covering enterprise solutions for tax technology. And I have been in the tax technology field for more than 20 years. A little bit about Avalara. We are a global company. We have 15 offices, more than 4,000 employees. That number keeps growing. We have been in operation since 2004. We're celebrating our 20th anniversary this year. And we serve more than 30,000 customers worldwide, in more than 75 countries. And we have a lot of transactions flowing through our systems. So a little bit about our products and services. We're basically looking at your company and how we can support your purchases and your sales. The focus here today is electronic invoicing. This is just for some awareness for you. Okay, so let's jump into some history. First off, let's just have a definition of what an electronic invoice is. There's two key points here on this slide. One is that electronic invoicing is not a PDF sent via email. The human readable unstructured data sort of disqualifies it from being an electronic invoice. An electronic invoice must have structured machine readable data. So a PDF could accompany an electronic invoice, but you do have to have that structured format, such as something in Universal Business Language, UBL. So if you look at history here, the concept of electronic invoicing, the usage is not new. In fact, in the 1970s and the 1980s, there was EDI started. For the procure-to-pay process, none of the data transferred here was accepted by tax authorities, and it did improve the process efficiency for those high volumes of procure-to-pay transactions, but it was complex to implement and complex to maintain and overall expensive. We then jump to the late 1990s. Invoices are starting to be sent as email attachments. This definitely improved accessibility, but it lacked automation. By the early 2000s, we are starting to see XML-based e-invoicing. So we have that structured data with that XML format. And this is starting to enhance the data exchange, especially in that P2P process still, increasing automation. Still, this data is not accepted by the tax authorities. Now, if we look at the late 2000s and into the 2010s, governments worldwide are starting to actually mandate electronic invoicing. Brazil is a country, a prime example of that. So at this point, when you have that mandate, adoption of electronic invoicing is boosted and there's standardizations. And in general, governments began to accept electronic invoicing. So sort of the conclusion here is that electronic invoicing is not new, but the obligation to use it is new. So, when we're looking at kind of current times now, there has been a paradigm shift. Whereas prior, electronic invoices were beginning to be accepted by tax authorities. Now it is mandated, it's required. And e-invoicing becomes the only compliant way of billing. This is a visual here, a little bit about how electronic invoicing works. You've got three main parties here now. You have the supplier, the buyer, and the tax authority, all involved at the invoice creation and delivery. So obviously, you do have your transaction flowing from the supplier to the buyer. In some cases, that flow can happen through the tax authority. In other cases, the tax authority is just reported to. So I'll step into some models that we're seeing. So various countries are choosing their own method of electronic invoicing. And we see these methods as falling into, kind of four different flavors at this point. And then we'll, talk about where it's going in the future. This is a little busy, so I'm going to break this slide down and we can talk through it. Kind of the simplest model here is referred to as the four-corner model. So in this example, you do have your supplier and you have your buyer. Each of them have a service provider who facilitates the sending of the data over their network for the invoices to be received. There's no tax authority involved here. It just kind of facilitates some interoperability between the supplier and buyer. Two common forms of this, PEPL is a standardization generally used in Europe. In North America, there is a new standard, the Digital Business Network Alliance, DBNA. We'll talk about that later. So the next level of complexity in an e-invoicing mandate is what's referred to as real-time reporting. And in this situation, the tax authority is involved, but it is receiving that invoice after it is sent to the buyer. And at that point, it's almost like it's like a micro return of here's what was sent, here's the data, and it's sent in a specific format. An example country who does this is Hungary. The next level of complexity is what's referred to as a clearance model. And in this situation, the tax authority is more directly involved. The supplier is required to send that electronic invoice first to the tax authority, and the tax authority will respond back with something that identifies that that invoice is a compliant invoice. And this could be a signature, it could be an ID, it could be even a QR code. Just some method is used to have that invoice be certified, and then the supplier will send that directly to the buyer. The sort of the more complex, most complex version of electronic invoicing with the most controls is what's referred to as a central issuance model. And in this situation, like the clearance model, the tax authority is involved up front, but the tax authority handles the delivery of the invoice to the buyer. So everything kind of flows through the tax authority in this example. The direction that we're seeing the e-invoicing going is to a point referred to as continuous transaction controls. And this is a decentralized model. If you think about the prior two models I just mentioned, that tax authority is really critical in order for a transaction to make it all the way from the supplier to the buyer. So if something happens to that tax authority system, that can actually slow down commerce within the country. It will either bring it to a halt, or if there's some delays, it's just simply going to delay the course of business within their country. When we look at this decentralized model, there is still that direct communication with the tax authority. You can still receive that compliance invoice. The direction is going still directly from the supplier to the buyer, but all parties are involved at this point. So this slide here is showing, the timeline is not to scale. You'll see at the beginning, it's about 20 years of time listing a lot of the countries that adopted over the course of that time electronic invoicing standards. Then we look at 2022, the last couple of years, all of these countries who are adopting standards and then or have adopted and are adopting. And then if we look at the next 5 years, there are quite a few more countries. This slide is from March, so this is already a month old, and there are likely some changes, and there will continue to be changes as countries update their timings, new countries decide to announce mandates, things like that. So this is something to stay on top of. Okay, let's talk a little bit about why. Why is electronic invoicing becoming adopted at such a rapid rate? So if you look at it from the tax authority perspective, the goal here is to reduce the VAT gap. So that VAT gap is made up of, it could be fraud, it could simply be errors, but definitely they're looking for non-compliance. And you can see that over the last few years, as many European countries are starting to adopt electronic invoicing, the VAT gap has decreased from 2019 to 134 billion. By the time you reach 2021, it's already been reduced to about 61 billion. So the indirect tax compliance model is changing because of these electronic invoicing mandates. Your tax compliance process, your indirect tax compliance process is no longer linear. Because that data is coming soon, immediately. The way that a tax authority is auditing businesses is changing because, again, they're getting that information up front as transactions are created. It's giving them a huge repository of data to work with. So they are able to review that information, run analytics, be able to gather exceptions, utilize AI, utilize machine learning to really understand what's happening and where there may still be fraud or inaccuracies. And they have that ability to validate the invoice prior to its delivery. So even upfront, they may be able to catch issues. So that leads us to the importance of getting your transaction tax calculations correct. The indirect tax space now it really becomes, the tax calculation really becomes more important. One, because it's real time, it's going to the governments immediately. And because the e-invoice is your compliant transaction, all of your e-invoice transactional data becomes the source of truth for your VAT reporting. It's what you need to reconcile with, and tax authorities can even pre-populate your returns utilizing this data. The authorities can see both sides of a transaction, so they can compare the supplier and the customer, output VAT versus the input VAT, make sure that there were digital signatures or QR codes or, whatever's required, and kind of identify the authenticity of the customer. They have the VAT number, there are other master data elements, other IDs that they have access to and can confirm. So what that means is your supporting data for your tax calculation has to be accurate. So we're looking at your customer data, you're looking at your item classifications, we're looking at your supplier data. Do you have all the right information on there? Do you have the correct VAT number on your supplier, on your customer? Do you have the correct ID number for being in the e-invoicing directory so the tax authority can recognize who your counterparty is? All of this requires, that you really do have to look at what's supporting that tax calculation, as well as how you were doing that tax calculation. It needs to be standardized and consistent. So I guess a little bit, it might be easier for me to just show the example here, but what we're looking at, that invoice, the tax amount and the rate is coming in as structured data. And the tax authorities are starting to look for the reason why. So you may have a standard rated transaction, but they may need something more granular or something additional for classifying that tax properly. So I think I'm gonna jump to the example here. This is for Singapore, and you'll see right at the top there, standard rated transactions, whereas now you just may need to identify that it just has to have the GST applied on your invoice. But what you're looking at here is that they want to know, why did you get that GST rate? Was it for just simply a local supply of goods and services? Was it something with low value goods? Particular remote services? There's several different flavors here that they need to see, which mean this detail needs to be on your invoice. And the complexity here makes it a lot harder to manage manually. Sticky notes on the computer monitor, things like that, are just not going to allow you to have that consistency and accuracy with your classification, and that's simply the standard rated classification. Each country is going to have different requirements of what they need here. I talked a lot about, what the tax authorities want, the tax authorities need, what they've mandated, and a little bit about why. But there also actually are opportunities, improvements really for the tax department, the tax function. What's happening with this digitalization is you have access to more granular data in the same way that the tax authorities do. So you can scrutinize your data, you can look at, the processes, gain insights into the same kind of insights that the tax authorities have the ability to glean. This allows you to supply information for management reporting. You can analyze this data for trends. You can see procurement data, sales data. It really kind of pulls the tax department into more of an active role. Beyond working just with accounting and finance, you now have the ability and the necessity to partner across the business, engaging with the C-suite, really showing trends because you have all of this rich data that you pull together in order to provide your electronic invoices. Briefly, I'll touch on the US e-invoicing. It's just one quick slide here. Over the last couple of years, the BPC, the Business Payments Coalition, started to define standards of what electronic invoices should look like. And what came out of that was a Digital Business Network Alliance. This is something that North America is adopting as a standard. It is based off of UBL, very similar to PEPL, the European network. This is, as mentioned before, if you recall, the tax authority is not getting directly involved in the processing and the transfer of invoices between the suppliers and buyers. What it's doing, it's using a four-corner model, and this is just to facilitate the exchange of data between businesses. And it will provide the infrastructure for tax reporting to work off of this data. Okay, for me, the fun part. I'll walk you through the Avalara e-invoicing solution. I did only pull a few slides here because I know I'm throwing a lot of information at you. This is sort of a value proposition right here. I think visually this is very easy to see. On the left-hand side, you have the traditional ways that an e-invoicing implementation may go. I sort of refer to this as spaghetti. If you need to implement e-invoicing, it becomes a local country project. You need resources who are familiar, fluent with that local particular country's language. The data that you pull has to be formatted in a specific way. It's different than other countries. So the project teams that you pull together to do that implementation are not necessarily going to contain any of the same resources of project teams that you would need to pull together for different countries. You're required to have contracts with multiple different service providers, again, local service providers in each country. And what we've done is we've actually come up with a way to standardize pulling the data from the ERP, getting that information, bringing it into Avalara, and then we take care of making sure that's in the right format, following the right workflow to satisfy the requirements for the individual countries that you may be working with. And it becomes very easy to add additional countries as you go. So we've done this as an API-based approach. And what that does is it allows for scalable deployment on a global level. So it is a single solution, scalable, seamless, and global. Here is an overview of our architecture. So if you look here, you see this is where you are. You're sending the invoice. The data will go into our REST API. The instruct is really where the magic happens. So the data comes in, it comes in a UBL format, UBL 2.1, and we look at it, we identify, okay, what country does this invoice apply to? What type of mandate is it? Is it a business to business mandate for that country? Maybe it's business to consumer or business to government. So it identifies all those things, puts it through our instruct, and comes out with that local country's format for that transaction, and whatever that workflow is, if it needs to go directly to the tax authority, however that works. And then we do that communication, and we gather that information to take care of everything for you. Even if there's a local country certified provider, we will manage that. We generate and pick up the QR codes if those are needed. There again is a workflow engine. If a mandate requires a PDF, we will create that PDF. This one, this is a very similar slide. This is a project that I've had the privilege of working on. We do work with Oracle for their Cloud Fusion ERP. And we are a seated service provider. So the integration that we have actually will pull the information about what is happening for your transaction directly into the standard Oracle screen. So there's not really a difference in how users will work in the system when you're utilizing electronic invoicing. And again, we pull all that data that's necessary, hand it to our ELR product, and then it goes through just what I talked about. It will go through that Avalara instruct and then send it to the appropriate country with the appropriate workflow. So I'll pull together kind of everything we talked about to a couple important things. I've got 2 slides here in the conclusion. So the first thing I want to point out are just some primary drivers, both from a government perspective as well as a company perspective. So for your company, what your priorities are, what you're looking at here with electronic invoicing. Electronic invoicing does provide a cost reduction. It gives you a faster payment cycle. You have efficiency improvements, and of course you're compliant. You have timely compliance with the electronic invoicing. The government, as mentioned before, is really focused on this to reduce fraud, reduce that VAT gap, reduce errors, reduce compliance control costs overall. And again, they have that visibility into what is happening at a micro level within their country. And they can use, the AI, they can use machine learning to glean insights and identify where there may be fraud or errors in addition. Okay, here's another thing I want to make sure that you think about. Why is it important to act now? As more e-invoicing, more countries have adopted e-invoicing and they're seeing successes, that is inspiring other governments to put together their own mandates and adopt electronic invoicing. When this occurs, the paper invoices will no longer be compliant. You need to have an electronic invoice in order to be compliant in that country. The mandates are being announced and happening quickly. So, an example of this is Italy. It was just a few months that Italy required from their announcement to when they required adoption of the program. So you need to be ready to be able to handle this. We estimate that by 2026, approximately 45% of the EU might be covered by e-invoicing mandates. And I will just point out, it is not only the EU. We are seeing countries, Asia Pacific, Japan, Singapore, Malaysia, Australia, a lot of countries across the world are coming out with new mandates. Obviously, a lot's happening in Europe. South America's a little bit more mature, but this has to be addressed and you have to be ready soon. Okay, thank you so much for listening. If you have questions or comments, please do feel free to reach out to me. I have provided my contact information here. Thank you so much.
Thank you again, Kate, for such an incredible thought leadership. I also want to thank everyone else for joining us today. This session, along with all of today's content, will be made available on demand following the event. Our next session will begin at 1:35 Eastern, which will be a keynote titled The Modern Day CFO, Prioritizing Growth for Future Success. Please click on the join button that will appear on your screen to be redirected, and we look forward to seeing you there.